Hi, everybody. This is Tom English. I'm the executive editor for the Southern Illinoisan in Carbondale. We are here today again from home with another edition of England in English. We're going to talk about the stock market. We're going to talk with my friend David England here. Dave, how you doing today?
I'm well, sir. I tell you what, fun weekend, and I'm ready that the week has started.
Yeah, no kidding. Another weekend indoors. I believe it's been 5 weeks indoors, but we'll get through this and we'll come out better on the other side from it.
That's for sure, sir. That's for sure.
So let's get right into it. Let's talk about what's going on in the stock market. And the main question, what people want to know, is where does the market go from here? I mean, it's a lot of questions, a lot of ups, a lot of downs.
Tom, I think that's a question on many people's mind. And, one of the things which we've always talked about is the aspect of the economy is on one plane, the stock market is on the other, and then Main Street economy is on another plane. So never all three in the same place. And as we saw towards the end of last week, saw this on Thursday and some on Friday. As far as the indexes go, it was a battle between the bears, the bulls, and the algorithm trading. It was just nothing but waves up, waves down, waves up, waves down. So it's going to be interesting that as we start this week to see, does that signal a market top, or is it time to go ahead and rally some more? Now, one of the things that's going to dictate that, as we know, last week we had another almost $500 billion being available with the small business and the hospitals and these kinds of things. That's going to be hitting the market this week because that's not going to take long to get out. And so that's going to be hitting. We have this week, we have a lot of this is probably the largest number of companies during earnings season that's announcing this week. So if we're going to break out and go to new highs, this will be the week that we do it. But just like we saw with action last week, if it's up and down, up and down, up and down, that's definitely a signal that we may be going back to test some previous lows. I think that we will. It's just a matter not if, but when.
So a lot of people want to know: Are we out of the woods? When is that going to happen? And is there going to be another shoe to drop?
Boy, I tell you what, that's a question that people are asking constantly. Are we out of the woods? The answer to that is keep one thing in mind. As far as the market goes, the market already has many factors priced in. So where we go from here, it's going to be depending on what the future news it would be, whether it's the vaccines, whether the number of people with CV getting it goes down, and we pray definitely that the number of deaths go down. But one of the things that we're also going to be dictating on way out of the woods is there going to be a large second wave? Is there going to be a small second wave? Is there going to be any second wave? Because this is the time where people are tired of getting cooped up. They're ready to get out. We've got a battle going on now between, okay, for safety's sake, people need to stay in. For economy's sake, people need to get out and start their lives and get back to work. And that's the huge battle. Whether or not it's the decisions made from our local aldermen to our local mayors, our politicians from a state level or in D.C., they're having to make some tough decisions. And, of course, they're going to be ridiculed no matter what. But it's one of those, you can remember back when we were in school, or at least in my day, Tom, we had to read many books, and one of them was 1984, and we thought, man, that would never happen. Yeah. And then another one was a deal that had to deal with catch-22.
Mm-hmm.
And so we're definitely in a catch-22. So are we out of the woods? No, we definitely aren't, because we're just starting to see these numbers that come through from the containment. Now, what's the other shoe to drop? I think that was the second part of that question, wasn't it?
Yes, it was. Sure. Yes, it was.
I'm very, very concerned about the commercial real estate industry, because if there's many businesses, unfortunately, especially the small businesses, that won't be coming back. And keep in mind, several years ago, as far as the United States economy, we moved from a manufacturing base to a service base. And we're probably give or take a little bit, around 80% service base versus actually 85 versus 15 when it comes to manufacturing. So as we roll this thing back, we're going to see which businesses can make it and which ones that aren't. Are those businesses that are going to reinvent themselves with whatever the new demand is going to be? So I definitely think the next shoe to drop is in the commercial real estate And I hope that it's not in the residential real estate. And I just definitely hope and pray that we don't have another wave that comes in this, that this thing will pretty much just run out of host and die itself out.
So what age should you stop investing in the stock market and consider investing safely for retirement?
Tom, that question came in from a lady down at Lake of Egypt. And, I think this is one of the most difficult questions I've ever had to answer, because back whenever I was teaching at John A. Logan for a couple decades, age had very little to do with success in the stock market. Matter of fact, on each the semester project was a trading portfolio after I taught them my basics, and then they trade their little hearts out on paper. It was paper money. And many times the people that would win that, and we'd always have a contest winner. The people that, and then you guys were at the Southern were always gracious enough to interview them and put the pictures in the paper. And man, I really appreciate that. But a lot of times those contests were not won by the 20s, 30 and 40-year-olds. Many times those contests were won by people in their 50s, 60s, and even 70s. And I can remember a funny story. I had this one, and most of the people who took my stock market classes, I almost had to drag somebody in that was in their 20s. Most of them were people that saw the need for it. And so this one young man came to me one day. So in other words, most of my students were 50 and above, 40 and 50 and 60. And one time a student came in and said, "Is this class for real?" I said, "Yeah, it's very much for real." I said, "Matter of fact, it's part of your degree." He said, "But all I see in here are grandmas and grandpas." I said, "Well, why don't you go ahead and learn from it?" And he said, "The guy next to me," he says, "he doesn't talk to him." I said, "Well, he's a researcher from Johns Hopkins University. There's a wealth of information there." And so that was also a good binding between the youth and the mature. But as far as when should you stop investing, one thing is when the fun is gone. But age has nothing to do with it. It's how much fire that we have in our belly to get the job done. So as far as age, there's not a line in the sand. As far as age and stop investing for retirement, well, that's a different story, and that's a different question. The closer we get, and I know people are probably so tired of hearing me say this, but some people need to act on it. The closer we are to retirement, the more we need to be focusing on a return of our money instead of return on our money. So the closer they get to retirement, they need to be in more safer haven vehicles, and definitely not be doing multi-trading and these kinds of things. It needs to be in more conservative. We used to say fixed investments, but you can't make money on money anymore. So that's one of the problems. So in other words, CDs. So that's why people are still investing and doing some trading to get that nest egg. Unfortunately, some of them to get it built back up, but to get that retirement nest egg as large as they can so that they can get the quality of life that they want to. So anyway, I appreciate that question from Marilyn.
David, what one technical analysis tool have you found to be the most accurate and most beneficial for you?
For me, oh goodness, as a technician, I study many, many tools. And whenever I came up with my simple Simon concept, I probably studied and implemented well over 100, mainly to see what didn't work so that I could focus on the ones that did work. But if I had one tool, between the oscillators, the moving averages, it would be probably a momentum. But I think the one single tool that is overlooked more than any is something as simple as a trend line. If a trend line is broken, so in other words, what we do is if a security continues to go up, then we just connect the dots between the bottoms. And at some point in time, whenever that upward direction stops and breaks through that trend line, that's a very, very powerful, one of the key components of a sell signal. So, and you know me, I like to get to the basics. It's called technical analysis. Some people just get way too deep in the woods with it. I like to keep it simple, hence Simple Simon. But to answer that question, it'd be a simple trend line.
So last time we talked in early April, when we were talking about oil, you said you wouldn't be surprised to see oil at least at 15 or 16 per barrel.
Yeah.
Well, it's gone a little deeper than that, but how did you know it was going to drop so far?
Well, matter of fact, whenever I mentioned that, you looked like you just got shot or something. I mean, it was one of those. And by the way, at that time, oil was trading well over 25. Matter of fact, 25, 26, because I believe that was around the 4th of April. Well, I study the indicators, and it gets back to the basics once again, supply and demand. And I saw that it looked like no matter what the headlines was going to say, we were going to have an oversupply of oil. And it didn't take much to connect the dots that we're going to have a decreasing demand for oil. What we need to do for oil to go up is to stop as much supply and increase the demand. And so I kept saying a decreased demand, and that's why I decided to make some money on when the oil started to go down. But it dealt with momentum indicators and something as simple as supply and demand. But now, Tom, just like the month before, whenever I said that I was looking for and at that point in time, the Dow was trading about 29,000. And I said I was looking for it to drop to 25 or 26,000 before it get back to 30,000. Very similar things. In this situation, oil was about 25, 26. And I said, don't be surprised to see it get to 15 or 16. If you notice, I didn't say, don't be surprised if it goes negative. All I was looking at was a pullback, nothing like what we saw. Matter of fact,
No.
what we saw this last week, I have never seen. But what we had was, we've talked about a short covering rally. Well, this was a long selling. And so they were selling the longs. And due to the fact that people had to take possession of it, that's one of the things where they were just hitting the sell button and not catching anybody on the other side to buy it. And nobody wanted to have 1,000 gallons of crude. Now, that's not gasoline. That's not refined. That'd be pretty nice. But they definitely didn't want to have 1,000 gallons of crude delivered to them, which it wouldn't happen anyway. You'd have to make arrangements from Cushing, Oklahoma, or wherever the pipeline would be. But to answer the question in simplicity, supply and demand and the momentum indicators that I was looking at.
So a lot of people are asking, should I buy oil companies while they're so cheap? What time frame should people be looking at before seriously considering adding some energy sector to their portfolios?
Yes, I believe a gentleman from Arkansas sent this. To answer this question, I need to back up a little bit, and his question deal with oil companies, and those would be equities. We're taking a look at the oil companies, and a lot of the major oil companies didn't drop in relation nearly as much as the May contract for crude. And we're talking about the Exxons, the Chevrons, and these types of businesses. But as far as the oil companies, I see lower prices. Just do the simple assignment on them and see. That'll give you if it's a sell signal or when to buy. But whenever we take a look at these equities, a lot of people are taking a look, and we'll go one step further in this question, the oil funds, whether it's mutual funds or exchange traded funds, and then also the ETNs, that's the exchange traded notes. And I will definitely say, be very, very, very careful about buying any of the oil ETFs or the oil ETNs if they deal with buying futures. So first of all, we never buy anything unless we know what's inside of them anyway. Because, Tom, we could have the key word here is we could have the very same thing happen with the June futures that around May the 20th that happened with the May futures around April the 20th. We don't know what's going to happen. Hopefully, demand's going to pick up, not just in the United States, but globally. But if it doesn't, that could repeat itself. And some of these futures have dropped from 30 and 40 down to $2 and $3, and that's why they're so enticing. But man, we just got to be really, really careful. And this reminds me of back in, I believe it was 2009, UNG, one of the natural gas funds, dropped from, I believe it was around 20 something all the way down to 5. But most people weren't around back then. I've enough scars to remember that, and wasn't always shorting that. I was on the long side of that. It bounced back up. So like Mark Twain says, history doesn't always repeat itself, but many times it rhymes. So the bottom line is I see lower prices ahead for the large oil companies. I also see them starting to gobble up many of the smaller companies if the price of crude doesn't get back at least to the break-even point. And part of this is let's just be real here, even though they say that it's not, they being Russia and Saudi Arabia, this is to do a major amount of harm for our shale corporations. And matter of fact, those ones that are on skating on thin ice to begin with and are highly leveraged, they're already out of business. And something that I saw recently, Tom, in talking about this, the amount of hate for oil companies is absolutely unreal.
Mm-hmm.
I find it but keep in mind those oil companies represent tens of thousands of families and workers that have little to do with the decision of oil companies. It also deals with kids and educations and buying shoes and these kinds of things. And I find it very hypocritical when people get on their Apple phones made in China and overseas with slave labor, downing another industry. But one industry that's acceptable, but another industry it's not because it's supposedly dirty. So, and by the way, Oklahoma and Texas aren't the only states that have, yes, thank you very much,
Yeah.
that are focusing on oil. I've got
Mm-hmm.
associates here in Southern Illinois.
Mm-hmm.
And when you take a look at it, there's a lot of oil used to be pumped out of the ground here in Illinois.
Yep.
And then it's not like, okay, we need to cut down on our bills, so we go to the part of the house and turn the thermostat down. You can't just turn one of these oil rigs off.
No.
It's very, very dangerous to get them turned back on, and there's a large the process to be able to do that. So I see. So to answer this gentleman's question, be very, very careful with the ETFs and the ETNs. Matter of fact, last week I remember seeing where one of the brokerage houses just stopped allowing their investors, their clients, to be able to trade some of those ETFs and ETNs. Why? Because so many people have been blown out by them. And it's going to be interesting to see if what we saw last week will repeat itself this week. Stay away from those, and I see lower prices ahead with the large oil companies.
So with student loans, and everybody's talking about that right now, a question from a reader here, should I hold off making my monthly tuition refinancing payment during this payment holiday?
Well, that's a very, very, very good question, because there's a student is paying that back, the student loan that they had to borrow to pay for that tuition in college and expenses. And then they see a break here. Well, I don't have to pay it back for a while. And I'm getting a 3-month holiday, whatever it is, depending on the company that does their student loans. Mm-hmm. In my opinion, that is a blessing that they get the holiday. Take advantage of that holiday. So that means that, let's just say that a student, a young man or young woman's payment is $150. Under normal times, depending on the length, the amount that they had to refinance and the interest, maybe out of that $150, maybe only $20 or $30 went against principal, Tom.
Mm-hmm.
Nowadays, since it's a payment holiday, they don't have to pay. Anything that they pay, from what my understanding
goes right toward it.
It goes right towards that principal. So to answer this individual's question for he or she, number one, do not stop making that payment. And anything extra that you could scrape up, matter of fact, part of that $1,000 to $1,400 check that you just got delivered to your bank, take a look at taking part of that and adding to the principal. Now, through this 3 months, so the answer to your question is no, do not stop doing it. If anything, pile on what you can. But here's the kicker that most people won't do, Tom. After this so-called holiday is over, go online and take a look at the payment history. Don't double check, but triple check that every one of those payments went right to principal. Mm-hmm. There was a time years ago, matter of fact, the bank president said, just send me the check. I'll make sure that it goes to principal. Anything extra. At the end of the year, I audit everything. Back then I had to have some payments. I audit whatever my installment payments would be, my insurance, and these kinds of things. And I got an amortization schedule. None of those payments went to principal at all. Matter of fact, it was applied to unearned interest. So guess what he got to do? Well, he had somebody do it, had to go in and redo all 12 of those transactions to make sure the extra went against principal.
Mm-hmm.
So I'm sure that the bank really enjoyed that, and I'm sure that the bank, they really liked me saying these things. But I'm for the person on Main Street. So yes, everything that you can consider, because I don't know what somebody else's financial situation is. I don't want to say put extra money on that if you can't make your rent payment. But anything over and above what your expenses are, consider putting that down to take advantage of this and make it a holiday for you. That's what I would do.
So last question, and it's a fun one. If I were to day trade, what kind of tips would you have for me?
Don't. Tom, a 3-day trade. You're day trading against hedge funds, mutual funds, ETFs, pension fund traders. But not only that, it's machine versus machine, sir. And not just machine, these are the algo traders. Back years ago, I can remember when the first traders, they were getting 2 and 3 trades off a second. Nowadays, it's close to 1,000. If you think you could, and by the way, I'm a day trader. If I don't day trade as much, but I love trading the futures. But if I see an opportunity in front of me where in just a morning's time, I can make enough money for what I normally do in a couple of weeks, I'll take advantage of it. But as far as if someone wants to become a day trader, go in and study it, because I'm sorry, I shouldn't have said don't. Just don't do it unless you know the risk. With that being said, instead of being a day trader, do the training to be possibly what I call a swing or momentum trader. So that what you do is you wait for that stock to either quit selling, and it's a reversal time, and then buy that reversal, or whenever that quits buying and it goes down, buy the reversal. In the stock market, the most money is to be made during times of reversal. But if somebody's just getting into this, first focus on your investing side. Then once you get maybe 90% of that locked up and making you money, and on the investing side, I've said this many times, focus on funds, high interest paying funds, hopefully those that pay monthly, so that monthly dividend can go in and buy you more shares. Do this in a Roth IRA that it's after tax dollars and it's tax free. Once you get that maxed, then take a look at possibly building up that 401k. If you're still working, do not overlook the aspect of if your employer still does a 1, 2, or 3% match, that's 100% money. So at least do what they're going to match. And then if you want to get on the trading side, only about 5 or 10%, but do it where it's a longer trade, swing trade or momentum trade, and then go in and find out which indicators work. This is last week, Tom, in your paper, we did the Simple Simon. Now we did that on the sell side and then ended on the buy side. And some of the people said, can you do one sometime where you focus on the buy side and then the sell side? So that's going to be down the road. But learn a system, and don't get your stock picks from Facebook or the internet. Learn how to do scans, focus on indexes, paper trade, until you get at least 3 trades out of 4 profitable, or mainly 5 out of 6. Otherwise, you might as well just take your checkbook, if you still have a checkbook, and just write a check to Wall Street, mail it off today. It's going to be a lot less painful.
All right, Dave, is there anything else you'd like to add?
Tom, you read this. You've fine-tuned it. The column that we have this Sunday. Man, I've been working on this column for at least 4 months. You're probably going to say, yeah, you should have worked on it a little bit more.
No comment.
Because I've never seen, and I've been studying the stock market since 1987. I've not seen a modern day column on what many people are thinking right now, especially those that have been, they didn't do anything with their holdings and they're down 50 or 60%. So in this column, how do you fix a broken portfolio? It was one of the most difficult columns I've ever written, but it's not about how difficult it is. It's what the facts the readers need to be showing and looking at. So I hope it wasn't too difficult to edit.
It was interesting. It was definitely different from all of your other columns, and And I hope that if you haven't had a chance to read it yet, go ahead and give that a read. It's online at thesouthern.com. But it is definitely interesting. So to say the least.
And I've already, take a look at some of the comments on it. I think some of the people have very, very, received it very well. Mm-hmm. So as far as that, folks, we don't know where this market is going. Don't be surprised if it doesn't come back, if something happens and tests the previous low. But just be ready, and just remember, it's just money. We have far more things important that are out there. And I definitely want to tip my hat to all the people that are out there that do what they do, especially from the medical aspect, so that we can have safer lives. And I just can't thank those folks enough. Can't thank them enough.
Yep. Thank you. And thank everybody out there. I hope everybody's out there safe, healthy, and quarantined. But everybody, thank you again for joining us. And we'll talk to you guys soon.
And Tom, something I agree with, we are going to be stronger and better off when we get through this on the other side.
You're darn right we will. Thank you. Have a good day, guys.
Adios.